Welcome back, ladies and gentlemen. Thank you all for joining. I'm really excited to take a look at a very special stock to me today. We're going to be taking a look at Meta Platforms. More specifically, it used to be called Facebook. They've changed the name of the company now to Meta, but they still kept FB as their ticker. Now, one of the crazy things is that you need to pay attention to this because I feel like the opportunity here is going to be great if you can get in at a modest price. So TLDR of this whole entire video, I really like the opportunity. I like the cash flow of the company. I like where the company is positioned currently, and I like the sort of catalyst that we're going to be seeing here in the next couple of years. But more specifically, if you can get this at the modest price that we have, make sure to hit the chapters down below if you want to see something specific. With that being said, make sure to like and subscribe, and let's hop right into it. Now, if you don't know what Meta Platforms is, I'm going to give you guys a quick rundown. So Meta Platforms owns Facebook, Instagram, Facebook Messenger, WhatsApp. They have a new crypto startup that I'll post here and a couple other different platforms that they've been trying to work on. Now, the big idea here is that this is how they started. Now they're trying to push into this sort of Facebook Reality Labs is what they're going to end up calling it. And that's going to be sort of your Oculus Rift and things that you've been hearing about, especially if you've been paying any attention during the Christmas time. This has been a huge gift that a lot of people have been getting. But really the majority of the business comes from the Facebook and Instagram market because they earn ad revenue through their different platforms. All their platforms are free, so you have WhatsApp, that's free, Facebook, Instagram, all that's free, so they have to make money, and the way that they make money is through ads that they run on these websites. Now, I would be shocked if you haven't heard of Facebook before because they pretty much run the internet at this point, as far as the social media apps go at least, because Instagram and Facebook are both humongous apps on phones, PCs, iPads, iPhones, and you name the platform, they've got an app for that at this point. So it's a huge business overall. It's just shy of $1 trillion now recently, and I think that there's still some room to run for this one. Now, they have two segments that they're going to be breaking this business down into. So they have family of apps, and that's sort of going to be your Instagram, your WhatsApp, your Facebook Messenger, and then you have your Facebook Reality Labs, or FRL. That's going to be your Oculus and then the upcoming Metaverse that they have been planning on. So when you look at this business, you're going to see the two different segments. The first segment, the FOA, or family of apps, that's going to be sort of your a stable, make sure nothing happens to it kind of side of the business. Your FRL, or Facebook Reality Labs, that's, I think, where the catalyst is, at least for this company, if you're going to be getting into it now. So one thing that I wanted to note also is that when you look at the segments and you look at how this is going to be broken down, you have the advertising side of the business along with everything else that falls under the other. Now, that's going to be including the FRL, or Facebook Reality Labs, but going in Q4 2021 and forward, they're actually going to be breaking this out for us, which is honestly one of the best parts of this because that's where I think a lot of people are watching. So for them to break it out, it just makes life a lot easier to guess at what the number actually is. So the advertising side of the business is going to be $28 billion in revenue, and then everything else that falls under the other is going to be $734 million. So when you're looking at this and where the opportunity is, that's going to be for the Q3 2021, and then the 9 months of it is going to be $82 billion, along with almost $2 billion on the other section. So you're going to see the opportunity, though. You can see that other has pretty much doubled since last year. And last year was kind of a fluke year in terms of people spending money. And I think that going forward, that piece of the segment, the other that's driven by Oculus and just sort of the metaverse in general, will grow a lot more and at a higher pace going forward. Now, they also break this down by country. Obviously, United States is going to have the highest amount of revenue. Their ARPU is actually the highest as well. And that's where I think that if you're looking at the advertising piece of the business, a lot of that money is really going to come from the international expansion, and then obviously making the ARPU on that a lot more efficient for those countries that are in Europe, because the whole opportunity here is not going to really come from the United States. The United States will be steady and it'll probably grow a tiny bit, but not nearly as much as the international can really grow, because again, there's a longer runway for them to go off for that. So the user growth may start to slow down a tiny bit in the next couple of quarters and really over the next couple of years for the advertising piece of it and their platforms, assuming that they don't add to that list. If let's say they just keep the platforms that they have, you'll probably see the user growth slow a little bit just because they're at 2 billion people almost, if not over that, by the time this video comes out. And so when you get to that sort of level, you start getting diminishing returns on how much you're actually going to be getting people onto your platform and getting them to use it. So I think that for me personally, I'm looking at the international expansion more specifically in South Asia and sort of Southwest Asia. So if you're looking at that, that's where I'm looking. But let me know down in the comments below if you guys have a different spot that you're looking in. Now, one of the great things about this business is where their revenue and sort of their profit and all that stuff really is. So hopping into the financials, you're going to be seeing that they have currently TTM, they have $112 billion. Yes, that is $1 billion with a B. $112 billion trailing 12 months. So Q1 through Q3 of 2021 into Q4 of 2020. So once we get these last numbers for the 10K, I honestly don't even know where the business is going to be. I just know it's going to be higher over the next couple of years. Now, as far as the profit margin goes, they've actually kept a great profit margin. They've kept their profit margin at 30 to 35%. And then obviously their gross margin is somewhere around 80%. Now, if you know anything about businesses and kind of where that all lands, that is absolutely insane that their profit margin is currently at 35%. Really, it's floating in between that. So some it's higher, some it's lower. But I mean, their gross margin being at 80% is awesome. So as far as where I think the sort of health of the business is, obviously this is a healthy business. So the current PE on this as of making this was about 24. I think it's come down just a tiny bit over the last couple of days. Then obviously you have sort of the PE ratio has come down ever since they've been basically increasing their earnings. Their price hasn't gone up too much because they've been, held up by a bunch of scandals and probably should be higher based on how they're performing, but a lot of the lowering of the PE is driven by the earnings and the net income that this company's been able to generate, and really the cash flow overall that this company's been able to generate. Now, one of the other things I actually wanted to point out was that they're starting to repurchase their shares. They really have a lot of shares outstanding, and they have a lot of cash on the balance sheet that you're going to be seeing here. And to be exact, they have $14 billion of cash on the balance sheet and basically no debt. So if they're not making investments and they're also not doing too much with the cash, it's probably worth it for them to do some repurchasing of the shares. So right now, outstanding, they currently have about $58 billion that they're able to repurchase with, and that's really only a couple percentage points of the market cap. But I mean, anytime you can reduce the shares at a lower valuation, which I think that Facebook is currently at a lower valuation than it has been in the past, I think it's a good opportunity to repurchase shares. And I think that overall they want to use that cash to reinvest back into the business, not necessarily to repurchase shares. But in the meantime, as a shareholder, this really benefits us. But you want to make sure that when you're looking at companies, you're not just looking at a repurchase as a repurchase, but you want to see how they're actually doing this. Now, in this case, they're using the cash flow from the business and the cash that they have on hand to be able to repurchase this. But for some businesses, they'll take on debt to repurchase shares, which it doesn't help you in the long run, but they do it just so that they can get the short-term gains for the people that they're taking care of. Now, as I mentioned, they have around $14 billion in cash. They really have no debt. They have about $11.5 billion in operating leases. So that's really just going to be buildings that people are working in, office spaces, those kinds of things. And then obviously their enterprise value to EBITDA is around 16. So I really like where this business is at valuation-wise. Luckily, I was able to get in sort of at the low 200s. I had been watching this and I just wasn't sure. And I wish I would have gotten back when it was around 150 back during the beginning of March 2020, because we would have been up so much more than we're currently up right now. Now, hopping into the industry, I wanted to go over two separate industries and things that I've been seeing. So the digital ad revenue is really sort of the big thing that I wanted to talk on, because as an industry, the business is ad revenue driven. Not that the metaverse isn't here, but people don't really know where it's going to go just quite yet or how money's going to be made. So if you're going to buy into this business, buy it because of the ad revenue story and take the metaverse as a free give me. So basically though, I did some research and I pulled up some industry analysis, and what they estimate in the industry analysis is that the internet advertising market is going to be going from about $359 billion in 2020, and then in 2027 it'll be just shy of above $1 trillion. Now, so that's a CAGR of about 17% per year, which is awesome from an industry standpoint. So what I wanted to add to is the net ad revenue spend from companies and what they're spending it with, or who they're spending it with rather. And really the two big dogs in this space is going to be Facebook and Google. And both those companies are sort of in the social media, in the search engine, in the data-driven sort of market. So they've been able to capture a lot of this efficiency on ad spend for companies that are using them for social media and different other platform uses. So you can see though that over the years, Google started at the top and has been ticking down every so often, and then Facebook has been able to jump into that second place spot and has been ticking up and eating at Google's market share. So for me though personally, where I see a lot of this ad revenue coming from in the future, it's got to be from the developing countries and companies that are in those developing countries. Again, I think that India is a huge untapped market that I feel like if Facebook can stay in the good graces of the government there, they'll do a lot better and it'll end up with a lot more gains over the future. Now, I want to go into some of the strengths and risks of this business. Obviously, one of the strengths is that they own the platform Facebook, they own the platform Instagram, and the ARPU that they're able to generate on that, like I had mentioned earlier, is absolutely insane from a business perspective. And their ARPU is only increasing. So ARPU being the average revenue per user. And you can see here that the United States and Canada, so really that North American region outside of Mexico, is going to be generating most of the revenue, while you have some of the other countries and other regions generating a lot less, which is why I think, again, the efficiency from the impact that they have with their platforms on these countries is going to be huge, but they need to make sure from a political standpoint that they stay within the good graces of these governments, because any wrong step, any wrong move, and the hammer is going to come down, the stock price is going to take a short shock, because it really, every time some bad news has come out, this company price is shot down, and then obviously the business doesn't change at all really, but it just the stock price goes down. And it's been happening ever since I've gotten into it. It's been happening ever since Facebook has gone public. So there's not really too much they can escape from. Whether you look at that as a good sign or bad sign is up to you. Another big thing that I want to point out is obviously on top of that ARPU, Facebook, or rather Meta, owns 4 out of the top 5 platforms according to Statista.com. So they own Facebook, WhatsApp, Instagram, Facebook Messenger. Those are some of the biggest platforms in general, just in the world, that people have downloaded. So that's also another thing, that when you have sort of this almost monopoly on data and people's just day-to-day life, you have a lot of control over where you can get your money from and how much money you can really get. Obviously, we're going to talk about the iOS changes and what impact that has had so far. It's impacted everyone, but from a platform standpoint, they control a lot of the platforms. Now, number 2 that I wanted to point out is obviously the metaverse. I think that with Zuckerberg and everyone else that's at Facebook, and the amount of R&D spend, just really the cash flow that they have and that they can spend versus any other company, and they can do this without taking on a ton of debt. I think that the metaverse is going to be a huge opportunity, especially when they control sort of the device, the Oculus, and they can try to control the metaverse on top of that. Again, this whole monopoly of platforms and trying to control everything is going to really help them over the long run. Also, one thing is that the Oculus app was one of the highest downloaded apps on the iOS store, and I believe on the Android store as well. It was one of the highest downloaded apps of any game, anything on phones. It was one of the highest downloaded apps. So people got this Oculus for Christmas, and they're trying to get into this metaverse now. And as this metaverse idea and just the metaverse in general really builds out, you're going to see a lot more impact from this and what this actually has to do. And that's, again, I think that the ad revenue and the R&D spend that they can actually sustain through this entire sort of cycle that we're going to be seeing is going to be insane when compared to other companies, because Facebook, or rather Meta, can basically cash flow this whole R&D spend and just figuring out the metaverse, while other companies are going to take on a ton of debt and really risk a lot of leverage just to get to the same level that this company is at. And now the last thing that I wanted to point out, and this is more so just a general thing, again, they have a lot of cash flow and they spend a lot in R&D even outside of the metaverse, and this is really the whole spawner mentality. And I believe that from a company perspective, companies like Facebook, companies like Apple, companies like Google, these companies spawn out better ideas, and these companies spawn out new and really profitable ideas in general, and with this they can make a lot of money over the long term and sustain their business model, because you go from being just advertising to adding the Oculus metaverse, and then whatever the next thing is, and whatever the next thing is. They keep acquiring all these tiny businesses like the crypto business that they have, and they're trying to just integrate and see what actually sticks and what actually makes them money and what actually is profitable, and then they'll let go of things that aren't profitable, that don't get them to the next level. And that's why I think that Facebook really is, from my perspective, one of my favorite FAANG stocks, and that's why I've invested so much money into it. Now, here we're going to go through a couple of risks, and obviously the first one is political risks. As I've mentioned before, this company has been the target of a lot of political attacks and a lot of political news articles and just bad press in general. Now, whether or not the morality of the things that have come out, I'm not going to argue that, but just from an investor standpoint, they are in the news a lot, and a lot of times it's not for things that are good. If you want to get into this company, make sure you just are okay with some of the political news and just what it has and how it affects the stock price as a whole. Because again, if you look at the stock price and all the dips that we've had along the way, a lot of times it's different articles, different news articles and news outlets that come out with stories that really affect how this company performs. Now, it's great for a long-term investor, a value investor that's trying to get into this, but from a sort of, would you take this to your mother kind of point of view, that's up for you to decide. So make sure though that when you're getting into this one, you're looking at the political risk, because if there's any huge crackdowns, it'll definitely affect the business long term. Now, the second risk is a big spend on R&D. Now, the only reason I listed this as a risk is they are spending a lot of money from their revenue on R&D, and if this doesn't generate into, some sort of new idea like the metaverse or some other crazy idea, it's a lot of money that they're spending, and I just think that it's a risk, but I think that they would tone it back if there was a business risk that actually came through that made that R&D spend a lot more risky. But I figured I'd point it out just because it really is a lot, and they've been ramping it up. So if you're looking from that sort of perspective, just make sure they don't get into leverage. That's really my whole point. Now, the third thing is the dependence on ad revenue. The majority of this business relies on other smaller businesses or other businesses in general, not necessarily smaller, to advertise on their platform. So they're going to be putting out ads on Facebook, ads on Instagram, and when you have something like an iOS change, it's going to affect the efficiency. I mean, overall, these companies have to spend more on their marketing spend, but that doesn't necessarily mean that they will. And when you decrease the efficiency on how the ads are targeted at people, it hurts everyone over the long term, because companies have to spend more, and if they have to spend more, their budgets might not be as high because their turnover rate might not be as much in terms of the churn rate that they're trying to get for these ads. So if you're paying attention to the ad revenue, it's their only source of income as of right now. Maybe as they build out more sections of their company, it'll be a lot more smoother and a lot more stable. But if we have any sort of downturn in terms of a recession or anything like that, this company is going to be one of the ones that gets hurt the most out of all the FAANG stocks, because of the fact that they're so reliant on this ad revenue. Now, again, the last risk, and I talked about this before, is the iOS just changes in general. So they changed it to make the privacy and let people, not have targeted ads come to them based on their own data. And this is going to hurt the company, and this will hurt every business that uses their ads, because you won't have as good of an efficiency on your ad spend. But I've seen it affect businesses. Facebook will likely figure out what's the best way to use their current data set and make choices and make ad targets based off that. But as far as going forward, they won't be able to get that updated iOS data from iPhones. Now, I don't believe Android has done anything yet, but again, that doesn't mean that it's not out of the question for them to make any privacy changes later on in the future. But as far as they don't control the phones, so any sort of privacy change or any update that's going to affect how people can gather data, that's going to affect this business a lot. So when you're looking into this and when you're trying to understand the business, make sure you understand the risks of, Apple or Google changing up their platform, changing up the rules of the game for their phones, because that'll make a huge difference going forward for companies like Facebook who rely on ad revenue so heavily. Now, I want to touch on the discounted cash flow that I did and really where I see this company going. So the first thing that we're going to be doing is taking a look at some of the inputs and then what the actual number ends up being in the end. So obviously, I got 2 billion shares. You got $104 billion in revenue. That's a little different from the 112 that we talked about earlier, but that's fine. The current estimated cash flow based on their current numbers was about $35 billion. That's around 34-35% free cash flow margin, and then you had about $40 billion on their net income. So that's about a 38% net income margin. Now the current PE is about 24 and the current price of free cash flow is around 27. Again, these numbers are a tiny bit dated based on when I pulled them. That's totally okay. You can look at the most current one if you want to go see it. You can look at the article that I've linked down below. I leave the DCF in there if you want to go look at it. But basically, the number that I came out with is going to be based on some of the inputs. So the share change I decided on 0%, negative 0.5%, and negative 1%. They're going to be repurchasing around a couple percentage points. So I think that this is probably reasonable for the time being. You have revenue growth of 10%, 15%, 20%. Profit margin and free cash flow margin. You got profit margin at 30%, 32%, 34%, free cash flow at 30%, 31%, 32%, and you got 14, 18, 20 for both the PE and price to free cash flow multiples. Now, discount rate I did is 12.5%. Again, this is all inspired by Everything Money. So if you see this, that's why it looks so similar. So ideally, you have a worst case, base case, best case, and based on the net income and based on the free cash flow, you're going to be seeing that $318 is about 7% higher than when we would like to buy it at. And then you have $308, about 10% for the free cash flow where we would like to buy it. So we like to buy it in between the worst case and base case. And then the number that I came up with on my own was around $290. So I think anything less than $290 and you're probably going to be in the golden range. That's kind of where I've been looking too for myself, is sort of anything less than $290. I think that that's a good sort of margin of safety position to be in. Anything lower than that, I'm scooping up shares left and right, buying options on it. But for now, I have about 25-ish% of my portfolio into this. I think it's a couple $1,000s in this position, and I'm just going to ride this one out for long term. If I see any dips, if I get any significant buying opportunities, which I'm hoping for in the next couple of weeks, I'm totally adding this position. This is one of those companies where they have a lot of cash flow that they're generating. Their free cash flow is going to keep going up as they keep expanding into new regions and just making the regions more efficient. So I think that overall, from a long-term perspective, this business model is going to be awesome. So let me know what you guys think down below. Let me know if you have any questions. I'm going to be leaving a link to this article and everything else that I've talked about today in the link down below, the Substack article link. But with that being said, I hope you'll have a great day. Make sure to like and subscribe on the video. Have a great day, y'all. Peace.